Hello everyone and welcome to this session of Cost and Works Accounting. In today's session of Budgetary Control, we will be studying four types of budgets, that is capital budget, master budget, selling and distribution cost budget and labor cost budget. I, Dr. S.R. Pagare from K.J.Somaiya College of Arts, Commerce and Science, Kopargaon, welcome you to this session on Budgetary Control. In last session, we have seen the classification according to function, and these classifications are sales budget, production budget, cost of production budget, purchase budget, personnel budget, research and development cost budget, financial or cash budget, capital budget, master budget, selling and distribution cost budget, labor cost budget, plant utilization budget and administration cost budget. In our previous lectures, we have learned up to cash budget. In today's session, we shall be studying further the capital budget. So let's see what is capital budget. Capital budget represents the estimate expenditure on fixed assets during the budget period. Budget period can be short period, medium period or the long term period. Capital budget consists of capital receipts such as disinvestment, borrowings, loans from public or foreign governments, Reserve Bank of India, etc. and capital expenditure such as expenditure on development of machinery, health facilities, etc. The word capital budgeting comprises two words, capital and budget. It implies setting targets for project schemes to ensure the maximum profitability, and hence this budget is also known as capital expenditure budget. It is based on following data. First, overloading shown in the plant utilization budget. Second, report of production manager requesting new production machinery. Third, report of works engineer requesting a new service machinery. Fourth, report of distribution manager requesting new transport facility. Fifth, report of accounts manager requesting new office machinery such as computers. Sixth, report of sales manager requesting new vehicles for distribution of goods. And seventh, decision of the board to extend the building work. In capital budget, each department of the business firm sends the annual forecast of capital expenditure in respect of its own departments. All the budgets are then merged into a capital expenditure budget for the whole business organization. Capital expenditure budget considers proposed capital outlays and their financing. A careful and serious planning is required on the part of top management while taking decisions on capital expenditure, because the return from such expenditure are not immediate but extend over a period of time in future. Heavy investments are involved in capital expenditure, and as such, wrongful decision would result in negative blow for the business organization. Maximum possibility is the aim of management, and this aim must be kept in view while deciding capital outlay. Following are the three popular methods used in ascertaining the profitability of a capital expenditure budget. First, payback method. Second, return on investment method. And third, present value method. Now let's see the advantages of capital budget. It assists in estimating cash requirements for renewals, replacements and expansion of capital assets and cash receipts from such assets. Second, it provides the basis for estimation of depreciations and maintenance cost. Third, it reveals the possibility of expansion of production facilities to meet the increased demands. Fourth, it forms a basis for long-term planning and policy making. Fifth, it enables consideration of alternative projects based on their respective profitability. Now let's see the other budget, which is classified according to function, and that is master budget. A master budget is an expensive business strategy that documents expected future sales, production levels, purchases, future expenses incurred, capital investments, and even loans to be acquired and repaid. In other words, the master budget includes all other financial budgets as well as budgeted income statement and balance sheet. A master budget is a summary budget of all the function budgets. Various functional budgets are incorporated into master budgets. Master budget is prepared by the budget officer and it remains with the top level management. This budget is used to coordinate the activities of various functional departments, and it also helps to control device. Master budget can be defined as a blueprint showing the proposed activity and the anticipated financial results during the coming year. A good example of long-term planning is a merger or acquisition of another company. Management must look at what the company can gain by purchasing another company and what resources would be redundant. For instance, every company has a group of employees in charge of the administrative duties within the company. If a company was purchased, there would no need to keep two sets of administrative staff. The management of the acquiring company would have to make a decision who should be let go. Management can also use the master budget for expansion planning. For instance, a machine shop should consider current cash flows, current loan rates, current debt limits, and future expected sales before management plans a large expansion. The master budget includes detailed budgets with all of this information. Let's see the next budget classified according to function, that is selling and distribution budget. The selling and distribution cost budget is a forecast of the cost of selling and distribution of the goods during the budget period. This budget is generally based upon the sales volume as per the sales budget. However, certain other related information should also be taken into account in the preparation of selling and distribution cost budget. The preparation of selling and distribution cost budget is the responsibility of the sales manager. However, he will be assisted on this work by the advertising manager, distribution manager, sales office manager, and the accountant of the business organization. Selling and distribution cost budget is prepared by grouping the cost according to the elements as follows. First, direct selling expenses. Second, sales office expenses. Third, distribution expenses. And fourth, advertising expenses. Now let's see one more budget which is classified on the basis of function, that is labor cost budget. This budget is prepared for anticipating labor time required for production. The personnel department is responsible for making this budget. The labor required for production may be classified into direct and indirect labor. Direct labor. The labor required for manufacturing the product is known as direct labor, whereas the term indirect labor means the labor which cannot be specified with production is called indirect labor. Separate labor cost budgets are prepared for direct and indirect labors, but from costing point of view, only direct labor cost budget is prepared because indirect labor is made a part of manufacturing or factory overheads. The labor content for each job work is determined separately. The labor time needed for each job, process and operation is determined with the help of time and motion study. Now let's see what is time and motion study in brief. The theory of time study was developed by management thinker and the father of scientific management, F.W. Taylor. The theory of motion study was developed by management thinkers Frank and Gilbreth. A time and motion study is a business efficiency technique combining the time study work with the motion study work. After its first introduction, time study developed in the direction of establishing standard times, while motion study evolved into a technique for improving work methods. The rates of pay, including all allowances, are multiplied by labor time for calculating labor cost. If labor incentive schemes are in operation, then labor rate should be suitably increased. If price rate systems for paying wage is in operation, then labor cost will be calculated by multiplying budgeted units and by the budgeted rate per unit. So in this session we have seen all these 4 budgets. In our next session we shall continue with the remaining 3 budgets. Till then, thank you.